Good morning, good afternoon, good evening, whenever you are watching this week's video. We out here. First and foremost, I almost got again by technology. How? I had to make sure that the mute button was off so that when I do this the first time, that we is cooking with all the grease. Welcome to week 2 in December, right? So I want to say that I'm glad to be back. Like December gonna get here. We're gonna be into January before we know. Where did the time go? But I also need a nap, right? The one thing I can tell you in December when the weather changes, of course, I love my hoodies. I'll have all kinds of repping the kids' school. I'm going to have a hoodie on because they are comfortable. It's like a blanket. Y'all, I'm gonna share this with y'all. And for those of y'all who are like, who is this lady talking about hoodies? My name is none other than Patrice L. Berry, EA, aka the Tax Cop. And so I want to share when I used to work at government buildings, one was it White Elephant party, the year when Snuggies was hot. Snuggies was hot. Yo, I was still in that Snuggie so much. I ended up with the Snuggie so that I could have my office Snuggie. I would always, because I'm always cold anyway. I would rock that office Snuggie like ain't nobody business. Now my second oldest son, stole my Snuggie. So this is why I like hoodies. Okay. Needless to say, we are into our week of breakdown. Right. We talked about the queen and her cousin modified adjusted gross income, or Maggie, or whatever you want to call her. And now we are going to be talking about the Kang. We're going to break him down so that y'all can understand why he's significant. I'm going to go through my 4 important numbers so that y'all really fully understand what is happening whenever you're doing your own taxes, whenever you're looking at my videos because you're one of my clients. I really want you to understand what information goes into this. And the best way to do this is take our butts over to the tax return. So that's what we're going to do. We're going to jump on over to the tax return. Boom, pow, pow. Y'all see that tax return right there? It's a copy of the 2024 1040. So I'll let y'all see that so you won't be like, oh, she's tripping. Now, we're going to be focusing on line 15. Y'all can't see my thing pointed at it, okay? Line 15. That's what we're going to be focused on today. Why are we focusing on line 15? Because that's the Kang. Now, if you notice, the Kang is the last section of last line in the income section on a tax return. How I know that? Because this say income. I'm not a genius. Say income. We got all these lines, right? All these lines that get us to the point of what income is. And of course, the Kang is none other than taxable income. So it should be in the income section. So we're going to break that down. And then over the next couple of weeks, we'll go into, right, what you owe them people, your tax liability, right? And what you paid them people. And then you'll see, really, taxes are just what I keep saying they are. It's some rules to them, right? It's a lot of rules to them, but it's just addition, subtraction, multiplication, and division. That's it. Addition, subtraction, multiplication, and division. And you'll see that we have 4 critical numbers or areas that we're paying attention to. All right. So our focus is on line 15, peoples. Stay with me. All right. So y'all know I got to go to my boo, the IRS website. So that's what we're going to do. Go over to the IRS website. And y'all will see that the types of taxable income are as follows, right? I've done a video on gross income. We'll probably link that below so you can know what the IRS talks about, where income comes from, but you also can jump back and look at that tax return. All right, so most income is taxable unless it's specifically exempted by law. Income can be money, it can be property, it could be goods or services. Even if you don't receive a form for reporting it, that's a W-2 or 1099 miscellaneous or 1099R or whatever. You're supposed to report all that. This is why I will probably more than likely have us link to a YouTube video where we talk about gross income, where I broke that down some months back, and it'll be sitting on YouTube, okay? Income is taxable when you receive it. Even if you don't get cash, or you don't use it right away, it's considered income if it's paid to it's even considered income if it's paid to someone else on your behalf. What? And this is interesting. Why? Because I actually am going through this for one of my clients that sold a piece of property but did not receive all of the income, right? We have to take the entire sale proceed to figure out, because when they walked away from the table, yes, they got some cash, but they didn't get all the cash because some of that cash got applied to another loan. And this is not in a 1031 exchange situation. In 1031 exchange situation, still, that's equivalent to it in a 1031 exchange, meaning they're not recognizing a capital gain in this year because they ain't touched the money and they went and did a like kind exchange. The same thing happens. I still have to recognize the fact that money has been moved and there's a proceed. The difference in a 1031 exchange, which is one of our, tax loopholes that are available to us, is if they do the 1031 exchange correctly, they do not have to recognize the gain in the year that they sold the property. Why? Because they ain't touch it. They follow the 1031 rules, which is a whole nother conversation on a whole different topic, right? But needless to say, if they did not do a 1031 exchange, right, and they got the proceeds, they sold it, even if they did not touch all of the money, right? Because there's some calculations we got to do. I got to count the full sale price, right? Not what they walk away with, but the full sale price as something that we got to consider as income to them, right? To help us determine what their gain is. Hopefully that makes sense. Even if it didn't hit their pocket. That's why I say, even if income is paid to someone else on your behalf, that's still considered income. All right. So let's go back and let's break this down. Types of taxable income: employment. That's our W-2s, right? So it doesn't matter if you don't get a form or not, right? Then we got self-employment income, which normally comes on a 1099, or if it's like rental income, it's a 1099 miscellaneous. A 1099 NEC is for independent contractor, right? So we got to keep those in mind. So freelance or independent contractor work, they get a 1099 NEC. Goods or services you sell online, you're going to get a 1099K. Gig work or side jobs, often through apps, in most cases, you're going to get two things. Like, because I'm thinking about my clients that do Uber, right? They're going to get a 1099K sometimes, and sometimes they'll get a 1099 NEC. Depends on volume, right? Renting or out personal property, that's a 1099 miscellaneous if you're going through a property management company or something of that nature. Bartering services or goods, you could end up giving somebody a 1099 NEC or 1099 miscellaneous to cover other income, because there's a section on that 1099 miscellaneous. And royalties, right? Which will come to you on a 1099 as well. Businesses from a partnership or a business entity, they will get a K1 in a lot of cases, right? Because there's income on there and there's information on that K1 that will determine if part of that income is taxable or non-taxable, etc. And then we got investment income. That's our capital gains. In dividends, we get a 1099D. Thinking. Yeah, right? I'm keeping it straight. For rental, you might get that's expenses. I was gonna tell you a 1098. Capital gains. You're gonna get a 1099S if you sold a property, right? Because we're gonna need to get that as income to determine whether or not we got a capital gain. Or you're gonna get a 1099B if you got a brokerage, right? So stocks, splits or trades or crypto or anything like that, that's going to be on a 1099B. Interest is going to be on a 1099 INC. Digital assets or crypto is going to get to be the same thing that's on a 1099B. Now, capital gains will also show up on your 1099K sometimes in a category if you get it from a partnership. Benefits paid to you. We got retirement income, that's a 1099R. Unemployment, that's a 1099G. Social Security benefits going to be on a 1099 SSA. Some life insurance proceeds will come. And in most cases, life insurance proceeds are not taxable, but we still need to see that information, right? And some survivor benefits will come on a 1099R in a lot of cases from annuities and things of that nature. And we'll have a code on there so that we'll know what it is. Other types of income, tax refunds. Be it from the state, you'll get a 1099G. Canceled debt will be a 1099-C. Alimony payments, court awards and damages, some scholarships will show up. Gambling winnings will be on a W-2G. Prizes and awards, right? All this income is crucial. Why? Because it shows up over here, right? We'll go back to the income section. It falls into something that's on one of these lines. 1A through about 11, right? 1A through 10. No, not 10. 9. Somewhere in there. That's where we're getting this stuff. All those income, that's getting us to total income. It just broke it down. Now, taxable income is crucial. I'm going to go to Investopedia for this to give you a better breakdown and an idea of what's going on. Hopefully it'll load. There we go. And I'm not paying for it. So taxable income, what it is, what counts, and how to calculate it. And we'll give you the link to this as well. Taxable income is the portion of gross income that's used to calculate how much tax you owe in a given tax year. It can be described broadly as adjusted gross income. Y'all know who she is. She's the queen. All right. The queen minus allowable itemized or standard deductions. That's my friends to determine how we going to get there. But AGI, she can phase you out. Modified AGI can phase you out, right? So we get deductions above the line. Those are adjustments, right? So student loan interest and deductible portion of self-employment tax, that's above the line. Then below the line, that's queen, is these itemized or standard deductions, and it determines which one you get to take. If your itemized deductions do not exceed, let me let y'all see my face. If your itemized deductions don't exceed your standard deduction, then what's going to happen is you're going to, by default, go with the standard deduction. Unless you're in a situation where you are doing married filing separately and one spouse itemized, then you automatically got to itemize. And sometimes that can be beneficial. Sometimes not so much. Okay? Overall, taxable income includes wages, salaries, bonus, tips, retirement income, investment income, passive income, all the incomes. All the incomes. It consists of both earned and unearned income, and it comes from compensation. That's your W-2, businesses, partnerships, royalties, all the sources I just gave you. Taxable income is generally less than adjusted gross income because we have deductions below the line that allow us to reduce it. And those deductions, standard deduction versus itemized deductions, are impacted by what your filing status happens to be. We're going to make sure you get this, right? So taxable income overall, remember, is the portion of your gross income on which you are required to pay income taxes. That is the biggest takeaway. You're not paying tax on all of the income. Why? Because we have those deductions below the line that help to reduce our adjusted gross income to what our taxable income should be. Now, you might be like, but Patrice, it sounds like income. That's all I'm hearing. The thing is, the reason why I call adjusted gross income the queen, and she's my most important number, is because she's going to set the tone for everything else. The lower I can legally get her by taking adjustments above the line, right? And leveraging losses and anything that I can, because your capital losses might exceed your capital gains, is because of the fact that it has a direct impact to what your taxable income is going to be. The lower she is, then I get to take either itemized deductions or the standard deduction. And for those of y'all who qualify business income deduction to help reduce taxable income to as low as I can get it. And so that is what the crucial part is. That's what I want you all to remember. This is why, to me, the Kang is the Kang. He decrees and declares what it is you pay tax on. Because taxable income, don't take my word for it. I just showed you with IRS. Taxable income is the portion of your gross income on which you are required to pay income taxes. Meaning that all of your gross income or your total income, you're not required to pay taxes on. But taxable income is that Kang. He decrees and declares what it is you actually paying tax on. Okay? I'm going to stop right here, let you kind of absorb it, get your questions together. And I'll do a recap of what this is, right? To give you an introduction when we talk next week, because next week, where are we going? Let's go look over here. What's the section we're going to talk about next? Let's go look at the tax return itself. So y'all understand, I'm giving you good stuff here. We're going to talk about taxes and credit so you can understand how we arrive to what your tax liability is. All right. And I'll do a good job of breaking that down for y'all in detail. All right. And that is our last week before we go on break. But that doesn't mean I'm leaving you hanging. Why? Because we will come back, and every week in your mailbox, you will have a breakdown of what's happening. We've already kind of planned it out until we come back and open our doors back up to everyone on January 12th, because we are going to be on break for 3 weeks. What? So I can take naps and put all the eye drops in my eye, because I don't have allergies. I have dry eye in here. Not only do I want to be as warm as I can be, since I don't have my Snuggie, since my kid took it and I'm wearing hoodies, but I want my eyes to be moisturized, because these jokers is big and get dried out. When we move, we lose the humidity in the air. Until next week, y'all, when we breaking down the tax and credit section of the tax of the 1040, I'm going to holler at you. And if there's anything else you want to know, please don't hesitate to let us know a topic you want to hear about, so that I can break it down in my tax cop way, so that I can be able to serve y'all in the best way. Always, we are here to help us, help you, help yourself. And until next week, that's all I got for y'all. Peace.